All right, here's a gold case study. Now, remember this morning when I was doing the technical analysis video, I already had a gold trade in. The market took the first take profit, covered the trade. So I had two positions as usual. One covered the trade. Now we're all the way down here. This is 1 to 9 already. Now, remember in that technical analysis video, my take profit was lower. Okay, so I moved the take profit all the way down here. But why would I do that? I reevaluated the situation for one good reason, and that was the next Astro hour I'm expecting is at 136. So by 136, we're either going to move up and retrace and sell off, or we're going to come down into a target and then start going back up. All right. So those are the two options that we've got. So having done that, what did I do? I drew the first level where the market may reverse. Okay. And surely enough, if I go into the 15-minute chart, this is where the market stalled. All right, which is fine. We're expecting that to happen. Okay. Now, if you recall, well, if you just check here, as you can see, the market has closed below that. So going back up into the opening is an option for the market to sell off again. I'm just going to wait to see if this will break down or not, because if it does break down, I'm going to leave it open until 136. But if I see that the market is like stalling here and just like maybe going to pull back up on a 5-minute chart, then I'm going to get out. That will give me about 1 to 9 risk return ratio if I get out here on that trade. Okay, but if the market does keep pushing down, which I suspect it might do, we'll probably come down here. Okay, because why do I suspect that it may keep pushing down? Despite the fact that we get intraday swings during the day, what really happens, the push really happens when the market is going from one aspect to the other. And if you recall, today I did mention that the hour, like what's coming after the Astro hour until 10 odd, is a bit tricky because there's push behind it. So we wanted to trade with a tight stop loss up here just above the entry and just let it go, because that tricky business could have pushed for a breakout, okay, because a breakout aspect was there. Or if it was going to reverse, then it was going to be like a pushy move. Now that pushy move brought us all the way in here, and that was why, if you take a look at the 23rd of February, I said, it's a bit tricky. All right. And that's why. So two options now. We're either going to get out here where there is here a demand level, okay, for the market to push back up, or we're going to just chill out and wait for the market to retrace up here and then sell further down. Okay, so those are the only two options. I just want to see how this is going to go. If it starts to go above this, I'm going to get out, okay, because obviously then things are going to go the other way for a retracement, and then we'll see how things pan out. And the important aspect for gold today is also going to be between 350 and 450, where we're going to have some volatility going up to 520, right? So you want to make sure you're managing the trade. But this is what I did, extending the stop loss. Also, I had a target down here initially as well for the same thing. I had an initial target here, but the market moved really fast. So I said, wait a minute, the next Astro we're going to be, it's going to be really down there. So we should have a bit more push. And that push really did come here, as you can see. So there was also no need to get out of the trade exactly at my target at 1 to 4 initially down here, okay, because of the Astro hour being forward. I said, well, maybe we'll go down to the next level, which was logical. So I pushed the stop forward and the take profit forward as well. Now, if this thing turns around here a little bit, it'll probably want to cover the gap. There's a bit of a gap here as well, so I don't want this going all the way up there. What I want to do is get out around here if it starts pushing up, and it'll make a little retracement. When it does that retracement, we can get out and just leave it alone until the afternoon. All right, so that's how you can extend it. This is not being greedy or changing your money management, okay? This is just being sensible, because we know things before they're going to happen. So why not use it in order to kind of like maximize the profit and really just, let it go as best you can.